All right, good afternoon and welcome to Asking for a Trend. I'm Myles Udland. For the next half hour, we're breaking down the trends of today that'll move stocks tomorrow. There's a lot to keep track of, so we're focusing on what you need to know to get ahead of the curve. Here are some of the trends we'll be diving into. Wall Street seeing green today, a trifecta record close on the Dow, S&P 500, and the Nasdaq. At the end of the session, all major indices finished the day higher. And is the market hot for big corporate mergers and acquisitions? We're taking a look at whether the economic climate will support new partnerships. And the king of Wall Street is giving more advice on how to make money in any market. We're talking the one and only Jim Cramer. Well, Berkshire Hathaway announcing a $9.7 billion deal with Occidental today, taking over its OxyChem business. That's the latest in a wave of M&A, with dealmakers announcing $1 trillion worth of transactions this summer. That's according to data compiled by Bloomberg. Joining us now is Marcus Bday. He's a principal and co-founder of BIG Capital, a private investment firm focused on acquiring software companies. Marcus, thanks so much for stopping by.
Thank you for having me.
I wanted to get your opinion on the software space and the threat that AI poses to some of those names before we talk about the M&A, because it was like, maybe a month ago, it just seemed like every investor you talked to, it's like, oh man, software, these things are all dead now because of AI. And I'm curious from your perspective, like what the AI risk and opportunity is at the operational level for some of these companies.
Yeah, I mean, I think that there is some risks there, but I think that what it is there's also a tremendous amount of opportunity. And I think that the way for you to take advantage of that opportunity is you, instead of looking solely at the startups in the AI space or the quote unquote disruptive companies, you look at what that technology can actually do, and then you look for a established company that actually has customers that can benefit from that that AI technology and kind of improve its offering to customers or improve its processes and development and those kind of things. I think that's where you're going to see the opportunity in finding those established companies that can use the AI technology to really supercharge their businesses. I mean, you are going to have a couple of disruptive businesses that are going to really make a change, but those are going to be fewer and far between. The real opportunity, I think, is, hey, software is here to stay. There's back-end software all through a ton of organizations. It's not that easy to change. And so how can you improve that software that's already existing in these marketplaces? And I think that's where the opportunity is.
Yeah, and I wanted to ask from your perspective, as an investor, do people not appreciate how much scope there is within the average organization to improve processes? Like, we talk on this program about Nvidia this, OpenAI that, ChatGPT, it's all great, and that's very exciting, trillions behind that. But I get the sense that you're looking at businesses where, I mean, they might be using paper receipts. Like, they might still be on, really outdated opportunities where your portfolio company can come in and really change a business. How does it kind of look from your seat?
Yeah, I think you see that, and I think that one of the things that happens is so many people are so focused on, I guess, the latest and greatest buzz things that you're not seeing the core businesses. And it's not just the companies that are operating with paper. It is even the large organizations. The impetus to change systems at a large organization, just the amount of effort it takes to put in a new system, it's cost prohibitive, or nobody even wants to do it, or some people don't want to take the political capital risk of changing the system. And so how can you use the systems that you already have and improve those systems, make them more functional for the customer and the client? So one of the things we actually do in BIG Capital within our portfolio companies is we query our customers. We try to go deep with our customers and we say, okay, what is it that the software is doing? What do you like about the software? What do you not like about the software? And then they'll tell you. You can say, okay, we'll build that for you. And now you can take the AI and you can say, okay, what can we do with AI to improve this offering that we have to our customers? And I think that if you find those good companies, especially in the lower middle market companies that can do that, then you have tremendous opportunity. And I think that's what you're going to start seeing some of these larger players do as well, these publicly traded companies. Instead of trying to go out and build the technology themselves, they already have the customer base, they already have the systems in place, they have a lot of cash on the balance sheet. They're going to start going in and moving in and trying to see, okay, where are these opportunities to acquire these companies and bring this technology in-house and really improve the offering to the customer.
Now, in terms of your firm, landing deals, how much competition is there? Has that increased in the last few years? Like, are you finding yourselves having to look at a deal where you're like, I'd have done it at 6, but these guys are telling me they got an offer at 10 times. Like, what's that dynamic?
Well, I can tell you, we've been in it for a little bit, so we've seen the tremendous rise in valuations based on everybody coming to this market, because we focus on enterprise level, back-end, mission-critical software systems. So when we were first getting into this business, you could find a lot of good value there. And as more people crept into the business and realized, hey, this is a good space to play in, valuations continued to creep up and creep up. And especially if you talk like between 2020, 2022, I mean, valuations were through the roof. And I think that they've come off a bit in the last, we'll call it 2 years, but I think that now you're starting to see a little bit of value increasing depending on what the technology is that the company has. But they're still off a little bit, but still much higher than they were, call it 7 years ago when we first got in. But that's just part of the market. There's opportunities there. You're seeing a lot more larger players come downstream because that's where you're going to find the opportunities.
Because what's the typical size deal that a company that you're acquiring? What's that typical market cap, let's say, or the enterprise value of that kind of a deal? The
enterprise value of the companies that we're, because we're focused on lower middle market companies, so we're talking, we'll go all the way down to $5 or $6 million of EBITDA, depending on what they're doing, because they can be a nice little add-on to a platform acquisition. But you're talking, sub $50 million of EBITDA on the companies that we're looking at. But that's where you can scale and really grow. You start to put those together and build something, and you have different pieces of the puzzle, different pieces of the value chain for those particular customers. And you can build an organization that has multiple offerings that can really help the customers. You're building on each one's customer base, you're aggregating them, and then you can start offering more and more services. And that's where we see value, because if we're trying to play with the big boys, the valuations are just too high. Where you're going to find value is, you got to get these smaller ones that really have some good technology. Start to bring them together, try to find those places where they work together, those systems that work together, and the customer bases that work together, and try to find value there and really increase that value for the customer.
And what industries, I guess, are your software portfolio companies serving? Is that the right way to ask that question? And just like how you think about those opportunities, because I in these conversations, everyone approaches it slightly differently. Of like, we want to roll up X, Y, or Z. Is it a software play? I don't know. How do you guys think about that on an industry level? I guess
on an industry level, we like to say that we're industry agnostic. We just like to focus on mission critical, back end, quote unquote, boring software companies. However, I would say that, having said that, a lot of our companies are in the fintech space, so financial services, back-end software companies. We also have a decent amount of customers in the healthcare space and the government space. So those are really where there's really critical needs, really core software to the business where there's not going to be that much change or resistance, and those are where we find the value. Long-term customers, very sticky. Very sticky products.
And I'm always curious, we'll finish on this one. I'm always curious for folks who are in the weeds actually doing these deals, how much the action in public markets does or does not weigh into either your thinking, your conversations, your process, because it has always interested me the extent to which the conversation we have on this kind of a program is just a completely different world of finance than the folks who are in at this, this middle market, like actually operating businesses, trying to find these things. Is there an interplay to you guys? How do you think about that as a firm or with prospective portfolio companies, clients, et cetera?
Yeah, I think that in general it does, at least historically it has, because that was really one of the big exits, right, was to go public. I think that over the course of probably the last 10 years or so, the private markets have gotten so hot. So, there's a lot of buyouts by PE firms, and then there's secondary buyouts by other PE firms. So it's just taking longer for companies to go public. And I mean, you've seen it even in the tech space over the last 2 years until maybe, the Figma IPO this year. There hadn't been that many IPOs in the tech space.
OpenAI is a $500 billion company now.
Whereas, you talked 10 years ago and everybody, that was the way to go. Everybody was going public. So I think that'll always come back. I think the market's getting hot again. So I think that you're going to start to see that. You're going to start to see that as a potential liquidity event for those investors, especially a lot of these PE firms are holding these companies on their portfolios for several years, and they're looking for the time to exit now. And I think you're going to see over the next, I'd call it the next 12 to 24 months, maybe even up to 36 months, you're going to start seeing that activity pick up in the public realm, because that's going to be a viable option to get liquidity.
All right, leave it there. Marcus Bidet with BIG Capital. Really appreciate the time.
Thank you.
That was great. All right, the three major indexes notching records amid AI buzz, even as the U.S. government shutdown drags on. Yahoo Finance's Jared Blikre joins us now with the trading day takeaways. Jared.
Thank you, Myles. We got to start with the shutdown, which Wall Street is completely ignoring. Not a big surprise. Sometimes you see it hit the bond market, but we are talking about record highs. As I said at the close today, 5 in a row for the Dow, the Nasdaq, S&P 500. Not only that, there was a record high in the S&P 500 equal weight. So it's not just a story of concentration as we've been worried about for years. I mean, we see real things happening with some of the smaller guys. And to that point, if I take a look at my leaders, my basket of ETFs that I kind of looked at, we're going to talk about crypto in a minute here. But look at ARK Invest is number 2. That's disruption, solar, IPOs. We got a couple chips in there. Biotech. China, you put it all together, and then meme stocks, those have been jumping too. Myles, I brought you a present. Here.
Oh boy, here we
go. Guess what? Tootsie Roll.
Oh, thank you.
That's right. So finally hit a record high.
Oh my goodness, look at this chart.
That is a great
unbelievable.
Chart. I don't even know if that shows you the what happened over the pandemic because it was intraday. It literally spiked right up here.
Yeah, I kind of remember this.
So, but that was intraday. So we got the first record high in about 2.5 years for Tootsie Roll. I think that kind of speaks volumes about the rally that was.
Well, when you brought up the equal weighted, I of course thought of our old friend Josh Schaefer, who was constantly banging the table on the equal weighted S&P. But you know, we sit here and it's like, oh, Mag 7 this, Mag 7 that. But I think that strength underneath the surface, and I know we call these memes, but Robinhood, Coinbase, these are companies making money now. Like they're in a different phase. Palantir's in the S&P 500. Like these are in a different phase of their corporate life. And while they do act like memes at times in the market, this is, in a way, diversifying out of, well, just buy Nvidia every day, which, by the way, is also trading at a record high, too.
Yes, and the entire chip complex, stocks hitting a record high. So, yeah, you put it all together, very much risk on here.
All right, you mentioned the bond market.
Yes.
Let's talk a little bit more about the nitty gritty there. And, you know, we'll talk the curve, which is always, if you want to be in the know, folks, just say, oh, I'm looking at the curve.
All right, so yes, we're going to talk about capping the curve. Now, as I said, bond yields were kind of low over the last 2 days, so not a big deal right now. But there are concerns that if the Fed lowers rates too much or too quickly, that's going to stoke inflation, and then the Fed will lose control of the long end because they don't directly act on that. So we sat down with Joe Brusuelas, and he's a chief economist at RSM, and we talked about this with him specifically on stocks in translation. Episode is out today, so catch that. And here's what he had to say about it.
Now, here's the problem. When Marin introduced the third mandate, it spooked Wall Street.
More uncertainty.
Because Marin's pushing for excessive rate cuts. That would almost guarantee that the Fed loses control at the long end, 10 to 30. And Mr. Marin, if you've noticed, have softly walked away from that. They've backpedaled. But, you know, Jared, you know, Ali, we're going to be talking about MBS, QE, Operation Twist, and yield curve control, I think, going forward. Because the logic of economic populism is you want a goosey economy no matter what, and you deal with those consequences down the road.
I love how he talked about QE, purchasing mortgage-backed securities, which is kind of part of QE, yield curve control. That's where the Fed specifically operates on the long end. He also mentioned Operation Twist. So this is a potential for a future problem, not one that we're dealing with right now, but I think it's very important to think about.
Yeah, and maybe someone in future press conferences will ask if Jay Powell will tolerate an inverted yield curve. Let's see if we can bring that one back.
That sounds great.
All right, let's talk about the main event. Let's talk about what's going on in the crypto market. Bitcoin, 120,000 tonight.
Yes. So we had a nice little shakeout. I think it was over the last weekend, and that was something that I was hoping to see. It didn't quite go down as far as I thought it might. But let's go over the last 10 days, because that'll capture exactly what I'm trying to show here. So we had this brief dip below 110,000, hit like 108 and change there, and then we just rallied over the last few days, and you don't get the sense of it necessarily looking at these line charts, so I'll give you a 2-month candlestick chart, but you can really see all these green bars here. So what I like about the current setup in Bitcoin is that, and here's another look, this is 6 months, is that when we hit this high, we had a nice momentum. Then when we we hit this high, which actually exceeded it, we did that on less momentum. That's called divergence. And so a lot of people would expect it to go down, Bitcoin to go down. And that's what happened. But as we are climbing back to these highs, we have a lot of momentum. So that keeps up, should be able to blast past those old highs. Another thing I like is that we have participation. It's kind of like the breadth of the crypto market. So that's what I'm looking at too. Ethereum, Ripple, Solana, all this stuff. Even Dogecoin up 5%. That's breadth.
Yeah, let's take a look at the ETH chart as well, because this was a big story. You know, I mean, we can see it here in that August period when we saw Bitcoin get back to those record levels. It was like, oh, finally, ETH is waking up, right? I haven't seen these guys in forever.
Yeah.
And now we're talking about ETH pretty darn close to a record high. I think it was a 4,800 maybe back in 2022.
When the shoeshine boy talks about gas fees, that's when you know.
Well,
it's time
and
to
so
sell.
I'm curious then, you mentioned like that overall thing, like where you see ETH in the context of the overall crypto market.
I think it blasts past 5,000 by the end of the year.
All right, we'll leave it there. Jared Blikre, thanks so much. Stick around, much more Asking for a Trend still to come. All right, Jim Cramer offering more investing advice in his latest book, How to Make Money in Any Market. He recently sat down with executive editor Brian Sozzi to talk markets, media, and more. Be sure to tune in to the Opening Bid Unfiltered podcast Monday, 7:30 a.m. Eastern for the full audio. Here's a clip.
It's lightning round time. I got all my questions that my universe asked me because they knew I was talking to Jim. Jim, I'm going to do it. I'm on all the stops today. Sleeves are all up, everything. One stock you'd buy and keep for a year.
That's going to be Nike. I front run myself.
Okay, I like that. The Fed cuts. You think they will be too soon cutting rates or too late?
I think they're fine. I think that Jay Powell's doing a great job. I don't know how he does it with cartoons written, "You're fired." Jay is an amazing guy, and I met Jay years and years and years ago, just at a party, and I said, "This guy is like really smart." And everyone else was saying like, "Yeah, but like he's like smart right now. Can't we just have a little fun?"
Mm-hmm. Recession next year or no?
No, are you kidding me? I'm not worried about a boom over here.
Most underrated CEO in the U.S.
Kelly Ortberg, who's turning around
Boeing.
Yes.
You think he can do it? What does the turnaround for Boeing look like?
It means living like you did on the floor, hit the street. He's living on the factory floor. By the way, humorless. I love that.
If you weren't doing Mad Money, what would you be doing?
I was doing Mad Money at home. That's the problem. I'd be just like looking at hey, I think you buy. I mean,
gardening. You like to garden?
I do like to garden.
I have seen these giant tomato photos of you.
No, I had a good garden this year, but my wife had to do all the sauce because I had to read my book by audio, and it was I lost a couple Saturdays, so we only did about 40 jars. I'm gonna have one tonight though.
Biggest investing mistake you've ever made in one word? Or two?
No, I'm thinking I'm gonna say Memorex, and here's why. It was a $2 stock. And I kept buying it at 1 5/8, 1/2. I said, how much could you lose? And I lost everything.
Last one, I'm just adding in here and then we'll let you go. Nvidia, what does the next 10 years look like for one of the companies that you helped discover?
Okay, Nvidia is going to make I don't want to threaten anybody or scare anybody, okay? But the next iteration, which is the Vera Rubin, who is from Philadelphia, is a reasoning chip, reasoning platform. So you could ask it right now, if you're a fourth-year associate at a law firm, you can help look things up. Someone would say, I need the history, I need everything that's ever been, every judgment that we've ever had on this one issue. The next one is going to be, let me tell you what I think, and it's going to be maybe superior to how you're thinking.
Wow.
So you don't need that fourth-year associate anymore. That's the big breakout, is the reasoning one. And we're all going to struggle with whether it reasons in a way that's better than ours. And there'll be far fewer mistakes. They do have to start getting deals. Like they have to start doing deals with the New York Times. You ever see you never get the Times because the Times is trying to stop them. That's why Cloudflare is such a good stock. But that is the next Nvidia, Jensen tells me, is the one that is going to dazzle. Do you know what read Moby Dick in a second?
Really?
Yeah.
That's not
actually, it was Grace Blackwell read it in a second.
That is.
And Moby Dick's a hard book to get through.
Yeah, I remember reading as a kid, Jim.
Call me Brian.
Okay. We're going to do Jim's got a lot to do.
Can I just say one last thing?
Please, go ahead.
I think you're that.
You're the man. I could actually, if you actually had time, I mean, this is like a 3-hour thing, but I know this is not Joe Rogan type podcast time. Jim's got to go. He's got shows to host. He's got people to do. He's got subscribers, and he's got a life to live. Get Jim's book, his 8th book, How to Make Money in Any Market. Jim, thank you for everything
Brian,
you've done for me.
So much.
No, I'm serious. Really.
Oh, thank you for everything you've done for me.
You're the man.
And that's a wrap on today's Asking for a Trend. Be sure to come back tomorrow at 4:30 p.m. Eastern for all the latest market moving stories affecting your wallet.